Good morning. It is Monday, June the 8th. Welcome to the programme, everybody. This is what is on our agenda. The tech sell-off moves to Asia and European futures drop. Do things look a little more stable in US futures? We'll get to that. Oil jumps as Iran and Israel exchange fire, giving us another reason to talk inflation and to talk rates. And here in Europe, it is an M&A Monday with Italian banks, French telecoms and British food ingredients, all very much in the mix. Lizzie.
Well, Anna, as you say, that sell-off on Wall Street that we'd seen for the Nasdaq on Friday has gone around the world. It's hitting Asia this morning. The Kospi still down nearly 8% as things stand. We had seen trading halted. The moves had been so dramatic earlier in the session. That dragging down the rest of Asia. We've seen losses in Japan and Taiwan as well. The Nasdaq, though, managing to eke out a little bit of optimism to start the week. I say a little. We are only flat to the upside as things stand. We're also factoring in, of course, the geopolitics as well as the tech. Brent higher this morning by 4.5% at $97.30 a barrel. We'll dive into it all throughout the programme. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. This is the opening trade. It's just gone 7 o'clock here in London on Monday, the 8th of June. And we're dealing with the same big two themes around technology and what's happening in the Middle East, but certainly developments taking us in new directions, and worth lingering on both of those this morning with Lizzie this morning. Good morning to you.
Good morning.
Lizzie, we don't have Guy and Tom right now. We will update everybody on where they are later on this morning because they are off on assignment in various important locations. But let's talk about tech and the tech sell-off. On Friday, we saw substantial selling, of course. The Nasdaq down by more than 4%, the S&P down by more than 2%. What is happening here? Is this just, as John Authers says, altitude sickness? We've come so far so quickly on that selling in the tech, on that tech AI theme. This is now moving into Asia, of course. We're down substantially on the Kospi. We've seen all kinds of trading halts being put in place on various indexes there. But it's still an index, the Kospi, that's up 80% year to date. So is it just this altitude sickness? The strong jobs report, of course, on Friday was the thing that put Fed hikes back on the agenda, or increasingly, perhaps, on the agenda. And then, of course, we've got the fears attached to more equity capital raising coming from big tech. And that all seems to suggest some indigestion for markets and the equity story. So what we are left with another day of tech selling, certainly in the Asia session.
Yeah, and you could ask whether this is all healthy. This NVIDIA CEO, Jensen Huang, saying that actually this sell-off is a buying opportunity. Get in while you can. When you talk about the payrolls report impact, it's not just through the expectation of a Fed hike before the end of the year. You could also say perhaps the resilience in the economy is promoting cyclicals and this rotation out of tech stocks as well. But look, when we look at that payrolls report, you know, Treasury's selling off the back of it, yields higher, and that continues in your bond space as well today. So you're looking at the 10-year higher again. Trump not happy about this at all, saying we've got a strong economy, don't penalise us for it with a rate hike, and saying, Kevin Walsh as the new Fed chair can do his own thing, but yet again, putting the pressure on the Fed to hike and the market not liking that.
Yes, and it does seem as if the market is running ahead of, well, certainly ahead of the president. We'll see if the market is ahead of Walsh when we hear from him. Next week is that first meeting under him, of course. But no hike needed is the message from the president. He sees lower interest rates as more appropriate, as you say, saying don't punish the US economy for the strength that we've got here. But meanwhile, we just showed a chart there. We are pricing in now a hike in 2026. And gradually all of those expectations for cuts in 2026 are falling away on Wall Street. We've got Goldman Sachs no longer seeing an interest rate cut at the Fed in 2026. BNP talking about 3 hikes, the first of those coming in December. So there's a lot of momentum behind the hikes narrative and inflation and higher yields. And another reason to talk about that this morning then, Lizzie.
Yes, and we turn to the geopolitics now, the second big topic on the agenda this morning, and that is the latest Middle East strikes. We have seen Israel and Iran trading strikes already. Over the weekend, we'd seen some of this. Early yesterday, US Central Command saying that it downed 2 Iranian attack drones that threatened the maritime traffic in the Strait of Hormuz. On Friday, we'd seen ballistic missiles fired at Bahrain and Kuwait intercepted, but still fired nonetheless. And this meaning that the US-Iran talks are still bogged down, not just by the continued strikes, but also the sticking points that were ever there, always there, still there. The Lebanon issue, the frozen assets issue, Trump officials suggesting that those frozen assets should go to some of the Gulf allies to help with repairs, and Iran insisting that these assets have to be released. So it looks like we're not any closer to peace this Monday morning.
Yeah, absolutely. It's getting a bit repetitive, isn't it? The things that are on the agenda and the things that are sticking points and the things that are not resolved when it comes to this peace conversation. So no surprise to see that oil is much stronger this morning. We're up by 4.7% on the Brent price. The thing that stands out to me as a little more surprising is that the dollar isn't stronger than it is, because we've got yields going higher. So you might think, because of what we saw on Friday with the Fed hike narrative building and tech selling off, that maybe the dollar as a haven would be performing a little better this morning. It's pretty flat, actually, and dollar yen is pretty flat, although crucially above the 160 or through the 160 at 160.28. So we'll continue to watch that and intervention watch there. But that stood out as an area of interest. But we'll continue to watch all these developments in the Middle East, and what that does to European stocks is interesting, because European futures are expected to be weaker, tech selling, but there could be, of course, that cushion of oil stocks going higher because of a higher oil price.
And there remains that question, if the war were to end, would we see a rotation into European and EM stocks? Now, speaking of Europe, we've had some massive news over the weekend. It's yet another M&A Monday.
Yeah, definitely an M&A Monday. Let's start with the Italian banking sector, shall we? But we've got a number of areas to check here. So it's complicated, is the Italian story, but Intesa essentially bidding for BMPS, kind of in conjunction with BPER through their largest investor, Unipol. But Banco BPM have also been bidding for BMPS. So this is Banca Monte Paschi di Siena, the world's oldest bank, as is often described. So Mediobanca and the 13% stake in Generali will be going to Intesa. Some 600 or so banking branches will be going to Unipol or BPER. So what we're witnessing here is more consolidation within the Italian banking sector. And I think the big question is how UniCredit responds. They're the biggest player right now. Will they be happy with number 2 position, which is what this deal would give them, as they've been trying to consolidate cross-border and they've been trying to consolidate within Italy. But we will see what the team over at UniCredit has to say about that.
Of course, they unsuccessfully attempted to buy Banca BPM, also pursuing Germany's Commerzbank. Interesting big moves on TradeGate as we look ahead to the start of the European cash trade. De Paschi already gaining before the Milano Open. But then it's not just out of Italy that we're seeing all of this, also France. So in telecoms, SFR, owned by billionaire Patrick Drahi, actually a consortium of French telecoms carriers looking to split up the customers and the infrastructure of SFR. So we'll also have to watch telecoms at the Open, even if it's still subject to regulatory approval. It
is subject to regulatory approval, which is important because this is going to take the number of players in the French mobile space from 4 to 3. That is the aim of it. That is what these consolidators want to do, because they want more pricing power, of course. But this is what they want to do to enable them to invest in 5G and in data centres, of course. And Tate Lyle, just worth a quick mention, getting a bid from Ingredion this morning. So we'll certainly keep all of that M&A news in focus as we get closer to that market open.
Well, let's tell you what else we've got coming up on the show today. We have Sonal Desai, fixed income CIO over at Franklin Templeton, joining us. We'll have George Elhedery, CEO of HSBC, speaking to Bloomberg's Francine Lacroix. Marija Veitmane, head of equity research over at State Street Global Markets, will be on the show. And Judith Dada, general partner at Visionaries, will be joining us from London Tech Week, speaking to Tom Mackenzie. A little clue as to where he is this Monday morning. Yeah,
absolutely. So that's Tom's location identified. Let's look ahead to what else we're watching throughout the week, because it is going to be a busy week, Lizzie. The London Tech Week, as we've just said, gets underway. Tom Mackenzie in attendance today. Plus, we'll be hearing from Tim Cook at the Apple Annual Worldwide Developers Conference. That's often a big event. How much is the AI thing relevant to that particular stock? On Tuesday, we get German industrial production data. Wednesday, we get US CPI. That's the big data point of the week. We also get Chinese CPI and PPI, important in the context of the oil price. A big day on Thursday. We get the ECB rate decision. That's the big central banking decision of this week. Will we get a hike? Are they at the forefront of that hiking agenda? SpaceX shares will be pricing on that day, if they have not done already. And, of course, the little business of the FIFA World Cup kicking off, as it does in Mexico. Friday, we get the listing of SpaceX. We get UK industrial production data issue as well. But shall we return to the ECB then, Lizzie? Because this could be the first of the big central banks to go on this hiking cycle.
Yeah, and it could be the first and last hike, according to the likes of JP Morgan Asset Management, Pictet and Carmignac, which is not what the market is expecting. Traders are actually pricing 75 basis points of hikes this year, but you've had a raft of people coming out and saying, look, the economy in the Eurozone is just too weak to stomach this. And we had data out on Friday showing that Euro area GDP fell in the first quarter of the year. So as we get into this, you could see on Thursday, if President Lagarde's messaging is less hawkish than the market expects, yield dropping at the front end. And so I was speaking to Lauren Van Bion, a regular on the opening trade, just this morning, actually, and saying that she's already long the front end for German bonds.
OK, so a lot of focus there then on not just what happens this week, but any guidance, of course, around the path ahead for rate hikes. And interesting to think about the extent to which these central banks then are on very different pages with very different dynamics. The AI trade having such an outsized impact on expectations over in the States. So we'll certainly keep an eye on that development. Coming up on the programme, global airlines will suffer a sharp drop in profits because of the Iran war, but IAG denies the industry is in crisis. We're live at the IATA summit with Guy Johnson. That's where he is. He is in Rio, over in Brazil. So we'll get to him later on in the programme. Plus, London Tech Week then kicking off with the focus on the state of the UK's AI industry. Tom Mackenzie will give us a briefing from there and bring us some important conversations throughout the day's programming. Up next, we will, as Lizzie said, be speaking to Sonal Desai, fixed income CIO at Franklin Templeton, who'll be joining us to discuss the strength of the US economy, higher oil prices once again. What does that add up to when it comes to the US 10-year? If you have any questions and you want to get involved in these conversations, please do. We really like to hear from you. IB plus BBTV Go. That's the function to use on the Bloomberg terminal. This is Bloomberg. Welcome back, everybody. Monday morning, 7:14 here in London, and European equity market futures are suggesting that we will be weaker at the start of trade. A lot of this has to do with tech nervousness, of course, and we could see some resilience to the London market as a result of a higher oil price. So let's go to that part of the conversation. Oil prices, as we've been saying this morning, have jumped after Israel said it struck several military targets in Iran, retaliating against missile attacks by Tehran. The exchange unfolding despite President Donald Trump's call for Israel's Prime Minister Benjamin Netanyahu to refrain from hitting back, to refrain from retaliating. We've just had some latest news flow coming through from the Houthis as well and their approach to Israel. So let's bring in our Bloomberg Horizons Middle East and Africa anchor Abir Abu Omar, who's in Dubai and can give us an update. Abir, talk us through what these tit-for-tat strikes over the weekend into this morning, what they mean and the latest news flow.
Good morning, Anna. So look, I mean, the ceasefire, the true stocks have been in a fragile state since the initial ceasefire was reached on April 8th. But what we've seen over the past couple of days especially really complicates things, right? So what we've seen over on Sunday is Hezbollah in Lebanon and Israel trading fires. Israel had retaliated to an attack by Hezbollah on the northern part of Israel to attacking the southern suburbs of Beirut, killing people and injuring others. What we've seen this morning is Israel taking an active point in attacking Iran, western cities in Iran. That includes Isfahan and some petrochemical plant, leading Iranian officials to evacuate personnel out of there. The latest that we're hearing, this red hot that just crossed through the terminal, is the Houthis. Now, those are the allies of Iran in Yemen, threatening a ban on Israel in the Red Sea. Now, Anna, just remember that the Red Sea had sort of escaped these tensions that we've seen over the past 4 months or so. The Strait of Hormuz had been massively affected, of course, with a fraction of tankers that would normally passing through these days. But the Red Sea had stayed away from the geopolitical tensions we've seen out of the Middle East, leading countries like Saudi Arabia to divert traffic there. So if that comes under threat now, that is potentially yet another risk to oil prices that we're seeing jumping, especially after that hot headline came across $97 a barrel. So it's an evolving story. The attacks have been going back and forth, so we'll have to keep an eye on the developments later today and President Trump's comments on those.
Abir, thank you very much for the update. That's Bloomberg's Abir Abu Omar, who'll be back, of course, with Horizons Middle East and Africa at 5 a.m. London time. Well, turning to the market impact, amid these fears that higher oil prices will add to further pressure on inflation, strengthening the case for rate hikes around the world. Let's speak now to Sonal Desai, Chief Investment Officer and Head of Fixed Income over at Franklin Templeton. She joins us around the desk. Good morning to you.
Hi.
So when we think about how this will feed into Europe, despite oil prices, can the European Central Bank hike rates more than once, given the growth picture?
So look, I think the ECB is typically biased towards being arguably or overly hawkish, much as the Fed has always been biased towards being overly dovish, apart from that one critical error, which the ECB made in 2022. It typically errs on the side of being too hawkish. So I think our baseline continues to be that they will hike, but clearly I think growth concerns are going to start factoring in as we go further forward.
Because there's some out there like JP Morgan Asset Management saying it's going to be one and done. If the messaging isn't as hawkish as we have come to expect from the ECB, do you think that you'll see yields dropping significantly? Is it a time to be getting into two-year bunds?
I think it's going to be I don't think that just what they say at the end of this press conference is going to be enough to drive a big buy.
Okay.
I do think we're going to see bunds rally into it. I just don't know that they will react that quickly. The ECB is likely to wait and see how long this will continue. And honestly, what we're seeing right now appears to be current, but we know that the war changes all the time.
Sonal, good morning. So the ECB very much in focus because of the interest rate decision this week, and oil prices are 4% higher just this morning, so increasingly in focus, perhaps as a result of that. But we shouldn't lose sight of this other dynamic we're talking about this morning, which is tech stocks selling off. The jobs report was really strong. And I wonder how you work the strength of the US economy into your analysis right now of what we do with treasuries, because last week, at the end of last week, I was with a lot of people talking about, how quickly we get to 5% on the US 10-year. I mean, what's your thinking there?
So, it's been a really long time, Anna, that I've been talking about fair value for US Treasuries at around 475.5. And this was without quite as much panic about what oil is doing. It's really based off the resilience of the US economy and the fact that, quite frankly, the Fed should have never taken us down to 350, 375. I've said that my call on neutral Fed funds is closer to 425. The market is moving around to that view. Clearly, rate cuts are off the table. I think it's premature to start pricing in massive rate hikes, simply because I think the Fed has the luxury of waiting and seeing a little bit, but not too much.
Okay, yes, I want to ask you about that, because you said in your notes ahead of our conversation today, if inflation, we've got US CPI, of course, on Wednesday, so if inflation gets beyond 4%, then the Fed needs to start thinking about hiking, but that could be next year. What gives them the luxury of waiting quite that long if we are, and we are expected to go over 4% this week?
No, it's not. For me, the trick is, as you get closer to 5, over 4 at the end of the year is baked in the cake. The war could end tomorrow, and you might see a rally. But I think 4% inflation is pretty much baked in the cake, mainly because over the last 3 months, we've actually had some significant damage to facilities, to stocks, and I think pressures on oil prices are going to remain, bringing oil closer to 80, even if the war were to end tomorrow. Magic happens, it ends. I still think we end the year closer to 80, and that takes you up towards 4, but potentially the Fed can wait and see. A few months of high CPI is absolutely expected. I doubt that the Fed will react to a few months. We do need to see some second-round effects, and I think we may get them. It really depends on where oil goes and how long it stays there.
Another argument against overreacting to inflation from the geopolitics is that AI is going to be disinflationary, one made by Kevin Walsh himself. But I know that you don't agree with that. Yeah. Why not?
I said, to me, the question with AI is going to do many things for productivity, but is it going to be disinflationary? There are different types of productivity gains. I would argue that the first iPhone and today's iPhone are very different and have very different impacts on productivity if you think it makes you more productive, which of course is arguable. But the reality is the price hasn't gone down, right, of the iPhone from when it was launched to where we are right now. The price hasn't gone down. So it's not obvious that all productivity gains are necessarily going to be disinflationary. So I think it's a leap.
But what about the AI investment boom? Doesn't that keep inflation higher for longer?
Absolutely, absolutely. I'd say, so, you know, the first stretch of AI, to me, is absolutely inflationary, not disinflationary. Right. And that is precisely because of the demand for labor, the demand for energy, everything is inflationary. And I think we're going to see that, and we will continue to see that against a backdrop of continuing US GDP growth, by the way. Yes. So, you know, everyone who talks about stagflation, I see the flation, don't see the stag.
OK. And on that subject of AI and the impact that it has on fixed income, there seems to be a debate about whether this is going to influence our star, whether this is going to, you know, because of what it does to savings. And hyperscalers are spending so much money on CapEx, and you either think, well, that depletes their savings, so that has one impact on our star, or you think, well, they'll accumulate all of the wealth from AI, so that does something else to our star. Is that one of the ways that you're thinking about this?
So, you know, actually, when I think about our star is tricky, right? Because, of course, you need some idea of underlying US GDP growth. The reason I don't base it on savings is those hyperscalers get global savings, not just the savings of the people in the US. We've seen that again and again. And therefore, I think it's too big a leap to go straight to the US savings rate when we look at our star. What I do look at is productivity. Productivity over the last 3 years, without anything to do with AI, has been around 3%. All right, and we haven't even seen AI-related productivity growth. Going forward, I think we're going to continue to see very strong productivity growth, assuming the Fed even gets back to 2% inflation. I think you very quickly can see 4.25% at least as our star. Sorry, 4.25% nominal for our star. If you're talking about real R star, probably easily 2 to 3. I'd say.
Just very briefly, you've said that Kevin Walsh is most likely the most hawkish Fed chair we've seen in quite some time.
He's been hiding it for a while, perhaps, then.
But more pressure from Trump to cut rates over the weekend. How does that play out when it comes to Treasuries?
So here's the thing. I think here we have to look at a couple of things. We have gone through close to 20 years of the Fed's first line of defense always being unorthodox monetary policy. He is the first chap who's come along in the last 3 Fed chairs who actually is talking about a reversion to what I would call orthodox monetary policy. And that's why I think he is basically hawkish. I welcome it because essentially the Fed has been swooping in to bail out markets now ever since the global financial crisis. And that's why I would say that when people fear that Kevin Walsh is overly dovish, I'd like them to point to the last hawkish Fed chair we have had.
OK, that's interesting. So the distinction then between what you do with interest rate policy and the whole suite of other things the Fed has got itself involved with. Sonal, really nice to see you. Thanks so much for coming in. Sonal Desai, CIO and Head of Fixed Income at Franklin Templeton.
Here's what else you need to know this morning. Let's take a look at our top stories. Nvidia and SK Hynix have agreed to collaborate on designing future generations of memory chips for artificial intelligence. The announcement came as Nvidia CEO Jensen Huang visited Seoul for meetings with his company's Korean partners. The deal gives SK Hynix a boost as it prepares to expand into the next generation of high-bandwidth memory known as HBM4. Here in Europe, a consortium of French telecommunications companies has agreed to buy billionaire Patrick Drahi's telecoms business SFR for €20.4 billion. Bouygues Telecom, Orange and Free Iliad Group have signed a memorandum of understanding to acquire SFR, France's second largest telecoms group, and split up its assets and customers. The landmark deal will be subject to regulatory approval in a test for Europe's tolerance for consolidation. And the American food company Ingredion has agreed a deal to acquire Tate Lyle for around £2.7 billion, taking another famous brand from the London stock market. Bloomberg first revealed last month that Tate Lyle was working with advisors after receiving a takeover approach. Anna.
Yes, so lots of M&A to talk about and to watch for this morning. Coming up on the programme, we're at the HSBC GCC Exchanges Conference. That's taking place in London. We're going to be joined by and hearing from George Elhedery, the HSBC Group CEO. He's in conversation with Francine. That conversation coming up next. This is Bloomberg. This is the opening trade, 30 minutes until the start of another trading week here in Europe. The futures picture then looks really very negative, and this is a catch-up from Friday, of course. The selling in tech stocks has gone from the US into Asia, and could there be another leg down for European tech stocks as a result of all of that, worrying about the altitude that we have got to on the tech story. We are also watching for London to outperform a little bit, perhaps, because we've got higher oil prices. That takes us to the bond markets, where we are seeing yields go a little bit higher as we have oil prices up by 4.5% this morning. Perhaps it's a surprise that we don't see more reaction in the bond market story, but we're up around 3 basis points, 4 basis points on these on French and Italian yields at the 10-year horizon. So that's the impact that we're seeing from the higher oil prices this morning. Let us get then, as promised, to the HSBC GCC Exchanges Conference in London, where Bloomberg's Francine Lacroix is standing by for an exclusive conversation with the CEO of HSBC. Francine.
Yeah, thank you so much, Anna, and good morning to you. I'm delighted to be joined by Georges Elhedery, the HSBC Group Chief Executive Officer. Thank you, Mr. Elhedery, for joining us, as always. Now, the focus, of course, on markets is the Middle East. The focus of your conference is the Middle East. How are clients behaving, actually, given the war with Iran?
Thank you, Francine. I mean, as you can see, we have more than 119 Middle Eastern companies present here today, $2.4 trillion of market capitalization. And we have 60 trillion worth of capital ready to be invested with all the attendees to this conference. We have more than 3,000 meetings organized for them over the next few days. So as you can see, activity carries on in the Middle East.
But is activity delayed so that there is still business, but is there going to be pent-up demand with things stabilizing in the Middle East?
The region has gone through testing times. Inevitably, we wish for better times to come. But what we could see is that the core activities carried on, and more activity should and would be expected as things normalize. But I think what's most important, Francine, is that the resilience of the GCC has been revealed following these testing times. And, you know, this is years and years, if not decades and decades of preparation, economic transformation, pro-reform policies, wealth accumulation, great partnerships that have been built, technology that's been utilized, which has been revealed now. And that resilience being revealed is just another driver of confidence in the long-term opportunities that the region offers.
What happens if this gets unresolved in the next couple of years? Again, does it suddenly pick up when things are resolved, or will companies find ways to do business, IPOs and M&A, despite everything that's going on?
I mean, what we've been observing already over the last 3 months, first is the strong resilience that had been built and that's now been revealed. But we're also observing a lot of investment in additional resilience in the region. We're seeing investment, in infrastructure capabilities, in policies and the business environment to support the long-term opportunity that this region brings to all these investors, and of course us as a main partner for all of them.
George, you've also just come back, I think, from 6 months actually in Asia. So your commitment there is unwavered as it grows bigger and more important. Have you seen any activity move from the Middle East to Hong Kong?
Well, we're very pleased to see that Hong Kong now has become the leading cross-border wealth management center in the world. And we've been calling this out for now a number of years, and we've been hoping that this happens and expecting that this happens before the end of the decade. And look how fast this has happened. This is clearly very encouraging. We see a number of Asian hubs also pick up in, be it a wealth hub role or be it regional treasury centers for our corporates. The region, the wider Asia regions remains, a massive structural growth story. And if you believe that the world globalization has been reconfiguring, where we're moving away from large point-to-point corridors into more of a multi-nodal network of connections, then a number of these economies, certainly the GCC economies, but also a number of Asian economies, ASEAN, China, India, become even more central to how how economic growth can be delivered. And our presence across all these connections makes us a perfect partner for all these customers, for all these clients, and for all these opportunities.
Is it an advantage, a clear advantage, not to be an American bank in this environment?
I think what's important for us is how and where and with what expertise we can serve our clients. Fact in point, our presence across our deep-rooted, long history, deep heritage presence in all these markets where our clients want connections clearly plays to our advantage, and our expertise in a number of products and services, such as our expertise in trade, our expertise in cross-border payments, is also positioned us well to capture the opportunities and to support our clients along these opportunities.
George, can you talk to me about the CIB? So where exactly? I mean, you've done a big bet there on how to organize it to service clients better. What's changed in the last 6 months?
Well, first, CIB, our core calling card in CIB is our transaction banking capabilities, where we are a market leader in payment, we're a market leader in trade, we're a market leader in foreign exchange, in security services in Asia and the Middle East, we are a market leader. We continue investing in our capabilities in the space. We've launched tokenized deposits in 5 markets, soon 6 markets. We have real-time payments in 35 markets. So we're leaning in on technology very heavily and bringing all these capabilities to our customers. And that's a standard calling card. This, of course, our deposit-taking capability, where we are liquid in all geographies, in all currencies, with all customers, all customer groups. Additionally, we've also invested in our investment banking capabilities in the debt space, specifically debt capital markets. We have one of the leadership roles globally in a number of parameters, and importantly, in our revised M&A and equity capital market capability that is focusing on Asia and the Middle East. We're now pleased to have won more than 70 IPO mandates in Asia, and more than 40 of which are in Hong Kong, our home market, which is a 10-time multiple of what we've been able to achieve in previous years. So clearly it's demonstrating that our strategy in the space also is working.
George, talk to me a little bit about AI. So we had Bill Winters getting in hot water because of some of the words that he's used. I know you've also put out figures on how many job losses we could see as a result of AI. But how do you communicate to staff that are concerned about their future?
So first, the figures that you mentioned are speculative. We have not communicated them. What's important for us is...
Do you have a figure in mind of how many jobs will be lost?
So that's only half the question, right? So half the question is, what are the productivities you can achieve with AI? And of course there will be productivities with AI, and there will be roles or activities that may be displaced with AI. It'll have an impact there. There'll be roles that are created in AI. And of course, you expect to operate more productively. I think the other half of the question is, as a bank, where do we want to reinvest these productivity gains? Because we want to be the bank of the future, not just the bank of today. The bank of the future means more capabilities. I would like to be able to accelerate and bring forward a lot of the ambitious deliverables we have for the future, and that requires investment, and that is job creation. So across those two questions, the most important parameter is how can I make sure that our colleagues are future ready? How can we make sure they're empowered to be able not only to drive the productivities of today, but equally empowered to bring forward and accelerate the deliverables of the future? So what are the tools we give them? What is the training we give them? AI is accessible. It's not rocket science. So therefore, the ambition to bring all our colleagues along a journey where they become a stronger version of themselves with utilization of AI is absolutely tangible, real, and can be achieved starting now.
Can you give me a concrete example on how it's changed either a unit or the way that teams operate?
So, for instance, some of the AI capabilities have allowed us to drive productivity gains in onboarding and KYC. We've achieved productivity gains in how we deliver the service, and we've managed to reduce the time by half. But our aspiration is to be hyper-personalized to every customer and to be able to deliver all our services as a moonshot in real time. So therefore, everything we've achieved in AI by way of productivity, I have the ambition to be able to reinvest so that we can go all the way to become hyper-personalized at scale, deliver these services not just in half the time, but in real time, and do it safely so that we at no point erode the trust we have in us, the massive trust customers have in us. And to ensure that we always maintain that trust, I need human judgment. I need human decision-making. I need human accountability at the core.
George, talk to me about what your biggest headache is. I don't know whether it's, some of the political concerns that we have in the UK or actually staff retention. I know it's hard in this kind of environment to make sure that you keep the quality staff.
Well, our policy with regards to our colleagues is to continue attracting talent, is to be able to retain talent, and very importantly for our talent is to be able to lay down in front of them career opportunities. And HSBC, with the activities we do across the geographies we do and the skills that we can offer, we have fantastic career opportunities for our colleagues across multiple geographies, across multiple activities. And of course, it's important for us that we reward them fairly, competitively, but we reward them also based on performance because we're a high-performance culture.
Okay, the one thing that you wish you could change right now, is it what actually some of the geopolitics, or do you just have to live with it?
Look, what's important in, when we're looking at the external environment is a fact of life. What's important is how we help our customers and our clients navigate it. This is where we have to lean in and use our expertise, our heritage, our muscle memory in how you navigate these challenges and make best use of them for our customers, for our clients, and help them navigate them. So it's an expertise that's hopefully an asset when the world is uncertain.
George, thanks so much for joining us. That was George Elhedery there, the HSBC Group Chief Executive Officer, joining us today. And of course, there'll be more to come from the HSBC conference here in London. Lizzie.
Francine, thank you very much. That's Francine Lacroix at the HSBC GCC Exchanges Conference in London, Anna.
Yeah, coming up on the programme then, Lizzie, we're watching risk appetite. The Tasnim news agency reporting that Iran is firing more missiles at Israel. Sirens going off in Israel as a result. We see small movement, but these movements were already in train in oil and in futures as a result. How will the ceasefire hold up? We'll get analysis shortly. This is Bloomberg. Welcome back. It's Monday, 7:45 here in London. 15 minutes until we get what looks to be a negative session for European stocks. Certainly the stock 600 then, Lizzie, pointing down by 1.6%. We've got lots to talk about here, whether it's a sell-off in tech or M&A in Europe, French telecoms, British food ingredients, Italian banks.
Yeah, we'll keep a particular eye on Italian banks, given all of the M&A that's been talked about over the weekend. Intesa Sanpaolo having offered to buy Monte Paschi for €30.6 billion just one day after a rival pitch from Banco BPM. Now, the moves are likely to spur a new phase of deal-making in Italian finest, and we can get some more detail now by speaking to Bloomberg's Tommaso Ebhardt. Tommy, good morning to you. Happy Monday. I wonder if these moves are going to simplify things, but what the hurdles are in the way of them in the meantime.
This is the big move we all have been waiting for years. Intesa Sanpaolo, Italy's biggest bank, decided to move and make a takeover bid for Monte Paschi di Siena after for years its CEO Carlo Messina has said that Intesa couldn't move anymore in Italy because it is way too big. And how he decided to do it, he did it by agreeing with Unipol to sell 50% of Monte Paschi branches to a new entity owned by Unipol and merged with the BPM, which is going to be called Banca Monte Paschi di Siena. So what Intesa would get in this deal, half of the branches of Monte Paschi, and particularly what is very interesting, Intesa is going to get Mediobanca, who was bought last year by Monte Paschi, and its stake in Assicurazioni Generali. So again, at the center of the banking M&A deal. There is also the interest in Italy's biggest insurer, Generali. Just as a reminder, UniCredit has bought almost a 10% stake in Generali few weeks ago. So yes, this is the big move. It arrived one day after Banco BPM proposed a friendly merger agreement with Monte Paschi. It seems a little bit that the Banco BPM statement arrived maybe because the speculation that Intesa was coming with a proper offer on the table was coming, so they tried to move first. Clearly now there is the Intesa offer on the table. It's a real offer with cash and stakes, so we'll see how markets will react in a few minutes.
Indeed we will. Just 11 minutes to go till the open. Bloomberg's Tommaso Ebhardt, thank you very much for that update. Well, let's turn now to today's markets in 3 minutes on the opening trade with our Markets Live executive editor, Mark Cudmore. Mark, good morning. I'm looking at red across the screen when it comes to equities already in Europe, but in the futures picture here in Europe, in Europe, and as we look to at least the S&P evening. Is today a day to buy the dip?
Don't think so. I think that the pain we've seen from last week has a little bit more to play out, at least in the short term. Is this the bursting of the AI bubble? I mean, it's certainly a possibility, but perhaps not yet. I think that the way the SpaceX IPO has been generated, that I think it's causing some short-term disruption, but ultimately it'll probably, prompt maybe one more leg higher. But I think that the kind of turmoil we've seen last week has a little bit more just technical pain to play out. I think the way you can see that is that, things like the Kospi, many of the Asian indexes that have closed already have closed near the lows. We'll wait to see if Hong Kong does the same later. So the fact that they closed towards the lows shows that at the moment, those who are buying the dip, who bought the dip too quickly this morning, are on the kind of back foot. And I think that's the dynamic we've got in the short-term session.
Mark, we've got oil prices up by 4.9% this morning. The headlines keep coming about testing of the ceasefire that holds by a thread, it would seem, in the Middle East. Just another reason then perhaps to be pricing more inflation and higher rates in the States, adding to, of course, the strength of the US economy, which we saw on Friday.
Yeah, to me, the news flow is very bad in terms of that the situation in the Middle East is looking pretty bleak still. And that is, causing real economic damage every day that it persists. And yet we've got financial markets that even after the correction at the end of last week are priced for an extraordinarily positive world. So I think that disconnect, until we get some material positive news, that disconnect only kind of converges or recloses again via financial markets pricing slightly weaker in the short term. So that's the dynamic I'm expected to play out. Sure, we could suddenly get a headline saying deal agreed, Straits opening this week, but I think that's extremely unlikely given the news flow we've had.
Mark, another headwind this morning is, of course, the expectation that the Fed is going to hike rates before the end of the year. I know you think that the Fed's going to hold as long as possible, but let's say with the CPI print and the rest of the data this year, what's it going to take to nail on that Fed hike?
My kind of narrative how this plays out is that they're going to be on hold, even though it's very clear they should probably be already considering a hike. But, they're going to be on hold for as long as possible until it's absolutely certain. And then in that case, when they do hike, it's because they're clearly behind the curve, and therefore it'll probably be multiple hikes if they do hike. I think they're going to hold for as long as possible and hope the AI bubble pops and you actually get a growth slowdown which prevents them from hiking. We get those job losses which cause that pain in the market, and you don't see the hike for that reason. So to me, it's either Fed on hold or they realize they're way behind the curve and they have to do multiple hikes, and it causes a lot of damage to other financial assets.
OK, Mark, thank you very much. That's Bloomberg Markets Live Executive Editor Mark Cudmore. And remember, you can get up-to-date analysis and insight from Mark and the team by going to MLIV Go on your terminal.
Let's get the stocks to watch then. Lizzie, we've checked in on a few of these, but Chloe has found even more stories for us to focus on this morning. Chloe, let's start with some M&A.
Yeah, good morning, Anna. Indeed, we've got Ingredion agreeing to buy Tate Lyle, the ingredients company, in a deal that values it at £2.7 billion. And what's really interesting about Tate Lyle is that it's the only remaining company from the original FT30 index in the UK. So that is quite a symbolic departure from the London Stock Exchange. And we have seen those shares actually really jump earlier in the year in May when that takeover approach was first reported. And so we are expecting those shares to move again higher this morning on the back of that agreed deal with Ingredion. Moving on to Airbus now, because it is said to have told some customers to expect delivery delays on some jets. And so this points to ongoing supply chain issues at the company at a time when Boeing, which is of course the closest rival, is actually making a lot of progress on output and really improving and accelerating there. And so we have seen Airbus underperform Boeing for quite a while now, as we can see here on the chart. And this could continue today on the back of those delivery delays. And finally, we are moving on to Novo Nordisk, because the CEO has said that he was looking to expand beyond weight loss and look into things like longevity research and aesthetic medicine. So this is a bet to expand beyond these obesity drugs, given that there's so much competition in that area from things like copycat drugs and Eli Lilly. And so we could see that perhaps boost the shares this morning. We've got an analyst saying that the new CEO, under this new CEO, there's a real focus there and priority on change. And so we could see that potentially lift the shares this morning after a bit of weakness over the last few months for Novo Nordisk.
Chloe, thank you. Bloomberg's Chloe Melly with some of those sectors and stocks that we should focus in on. I'll add in another sector. Lizzie, we've talked a little bit about this, but the French telecom sector. So with Bouygues, Iliad, Orange buying SFR, the telecom space within France shrinks from 4 to 3. Mobile telecoms, of course. So we'll watch Orange, we'll watch Bouygues, certainly at the start of the trading day.
Overall,
we'll watch technology.
Yeah, on TradeGate, you've also got Sivers Semiconductors and Worldline among the most active of TMT stocks off the back of the French telecoms news. OK, and we'll watch the the tech space overall because, of course, of the selling on Friday. Does some of that have further legs into the European session? But then, of course, with what we're seeing with oil prices, how high will some of those big oil names go? What kind of cushion will that provide here in the London market, for instance? Yeah, and of course, Italian banks, as we've said, Banca BPM, Intesa and Monte Paschi, all in focus off the back of the moves that have been announced and speculated about over the weekend. So as a whole, we've got Euro Stoxx 50 futures down 1.5% as we inch towards the open. Just over 5 minutes until we get there. FTSE futures cushioned expectedly by the oil exposure, down 0.7%. We'll bring the open next. This is Bloomberg.
Welcome back to the opening trade, everybody. A few minutes to go then until we get that opening trade. Now, sometimes on a Monday, Friday seems irrelevant. On other days, like today, Friday still seems to have some relevance. So let's check in on what happened on the US session on Friday, because this is important. This is where Europe closed out. And after Europe closed, we saw some heavy selling in the US session. So do we have more of that negativity around tech stocks to price in? Since then, this has gone global. We've seen Asia stocks under pressure. The Kospi in particular, Samsung, SK Hynix, those names that have gained so much from AI enthusiasm, they've been heavily sold today. So how does that translate into weakness in tech stocks here in Europe? How much is in the price? How much more weakness do we need to see? So with that in mind and other dynamics that are affecting markets this morning, let's look at where the futures picture puts us. US futures have stabilised a little bit, and it's important to say that. So perhaps we are going to draw a line in the sand around this a little bit, although Mark Cudmore, our colleague, didn't sound all that convinced on that moments ago. So European futures are pointing down by 1.5%. FTSE futures could be a little cushioned, though, by higher oil prices. Tensions in the Middle East, more than tensions, a real testing of the ceasefire by active kinetic attacks between Iran and Israel. What will the markets do with that? DAX futures then, Lizzie, down by 1.5%.
Well, Anna, apart from oil and tech, we should specifically be watching Italian banks this morning after the M&A speculation over the weekend. Both Banco BPM and Intesa making separate offers to acquire Banca Monte Paschi. We also watch French telecoms, this on the consortium of French telecom companies agreeing to buy SFR, and Tate Lyle in focus on Ingredion agreeing to buy it. both, Tate and Lyle significantly higher on Tradegate this morning, Anna.
Yeah, so plenty of M&A to talk about on this M&A Monday. Will any of that cut through? It might for the individual names involved, but for the broader markets, we are going to be focused on those bigger themes around tech selling, around response to the higher energy prices coming out of the Middle East. All of those things very alive and relevant when it comes to what happens on these European equity markets this morning. So futures suggesting some downside. We are out of the gates and we are weaker, down by 0.3% on the stocks 600. The FTSE 100 down around 0.25%. We don't have any of the other major markets open just yet. And Lizzie, with all of the news flow that's been hitting us over the weekend, perhaps it will take a little time to get some of these markets open. The DAX springs to mind when I say that, of course. The CAC 40 then is open and it's down by 1%. The AEX down by 0.9%. Thinking about what happens to big tech, we'll keep an eye on what's going on with ASML. IBEX down by 0.75% on the Spanish market there. So the DAX not yet open. Might it be there that we see the worst of the selling? There we have some tech exposure. And if we have another day of tech negativity, maybe it's expressed there as well as on the AEX. Lizzie, what are you seeing when it comes to the individual sectors then as we wait for the German market to get into its stride?
Well, Anna, exactly as expected, at the bottom of the sectoral basket this morning is technology, down 2% on the nose. This following what we've seen in the Asian session, what we saw in the American session on Friday. And so tech down 2%. Some of the individual names within that sector suffering this morning. I'm looking at the likes of BE Semiconductor down 4.8%, ASML down 3%. But at the top of the basket, as we expected, energy at the top, so more than 1% higher, as we have seen oil prices higher. 5% for Brent at 97.75 a barrel off the back of the geopolitics, the strikes exchange, as we say, between Iran and Israel. Then if we look to banks, they're kind of in the middle of the basket near the bottom. You've got about 3/4 of sectors in negative territory this morning, 1/4 in the green. But we have been watching some of those individual banking names in Italy. So Banco BPM down 2.4%, Intesa down 2.5%. We'd seen at the open significant losses for Sivers Semiconductor, this off the back of the French telecoms M&A. They're now only down 2.4%, but Worldline down 3.4%. Interesting on Tradegate, we'd expected Worldline to be up off the back of the SFR, the agreement to buy SFR, but in fact to the downside. So a real slew of negativity across much of Europe this morning, Anna.
Yeah, very thorough. I'll only add one in there then, and that's Orange, and that is up by 1.6%. So that is part of the consortium, of course, of that are going after SFR and trying to consolidate within the French telecom space. So we'll see how that one plays out. But we are seeing some areas of positivity then for the European markets. But the overall message is one of weakness, down by 0.9% on the stocks 600. Let's get some analysis with Marija Veitmane, who's head of equity research over at State Street Markets and joins us on set this morning. Marija, really nice to have you with us. Now, you are and have often been for such a long time such a fan of big tech, big US tech, and I wonder how that sits with you given the Nasdaq sell-off that we saw on Friday, 4%. Nasdaq futures are actually stable this morning, up by 0.2%. So maybe that's the line in the sand you want to draw. But what are you thinking about your substantial exposure to US big tech right now?
Yeah, I mean, tech sector, absolutely, and absolutely right. It's been our favorite sector for a very, very long time. And the reason we like tech sector, because it's really the only sector with a strong and secular earning growth and stable and predictable. And I think right now, I mean, day like today probably is like a real test for that. Because, I mean, there are so many negative headlines. And where do investors run? And okay, so you run to cash. That's probably like one place to go. But within equities, you want to go in a place where you're somewhat certain about future earnings. And it's not defensive. Defensive sectors have a very low margins and higher inflation is really painful for them. It's not cyclicals because, I mean, we have demand destruction. It's not financials. Yield curve is flattening. So tech kind of remains the only place where you can be certain about earnings. And that's what investors are doing.
So it's still TINA, in your view. It's still TINA, the tech sector. Okay, so it's interesting to get your perspective as such a tech enthusiast, evangelist almost. Maybe that's going too far. But as to why you think tech is selling off, because then we can ask if the sell-off is sustainable or if it's a buying opportunity. Jensen Huang saying it's a buying opportunity, of course. So is it because we've just come too far too fast and this is just some sort of, just a sense check? Do we really want to move quite so quickly? Is it about higher rates, and can those higher interest rates really damage the tech trade, do you think? Or is it about all of the capital raising that we're seeing, the equity capital raising that we're seeing from the sector, from the hyperscalers and the new entrants coming? What do you think is driving this negativity?
I mean, if you go through kind of your three options, I mean...
You can add more.
Well, I mean, we can add, I mean, valuations, people often bring concentration, positioning. I mean, to me, it's positioning. We know that investors have gone into tech very, very substantially. I mean, we'll track large institutional investors through our custodial database. They double the size of the off-benchmark holdings in tech since the start of the Iran war, right? So that's what they did. Since the start of the Iran war, hostility started. We don't want to be in cyclicals. We don't want to be in defenses. We don't want to be in financials. The only place they wanted to be were tech. So holdings really, really increased. Positions are high. I mean, you get any negative news, and performance has been fantastic, right? So a little bit of profit taking, a little bit of position adjustment, that's a really sensible thing to do. So, I mean, to me, that's... And we've seen quite a few of like those episodes where, I mean, tech was doing amazingly well. You have a few days of sell-off, and then by the end of the week, we had to higher levels than we started. So, I mean, that's our speculation. I mean, nothing fundamentally changed since Friday.
So you're buying this dip, Marija?
Yeah, I'm buying everything.
What if we do get peace in the Middle East? I know that it looks a long way off, given all of the headlines that we've been breaking this morning. But if you do get one, an end to the war, do we see a rotation out of AI leadership into EM and Europe?
I mean, parts of EMs are doing well, or like tech-related EMs. But, I mean, the way I'm thinking about rotation into Europe, the way I'm thinking about rotation into, I mean, small cap value, I mean, you can put lots of cyclicals in it, is it's all about earnings, right? So what we had at the end of last year, and it looked like there was this idea of rotation, is, I mean, prior to that, all earnings were in tech, and it looked like earnings were about to broaden, right? So we had earnings expectation in small caps, in tech, in like cyclical areas doing a lot better. And then investors, okay, we don't have to pay high multiples for tech, we can go and get better earnings somewhere else. So that's the real question. So if you say the scenario is that war ends and we get like lasting peace and oil price goes down and kind of cyclical recovery picks up, yes, that's when you buy Europe. Are we close? Probably not. And even if we get like some announcement that war is over, I mean, oil price will probably stay fairly high for some time. We need to have adjustment. So I think that's a scenario we're looking for to rotate into Europe. But it needs to come with a cyclical earnings recovery, and we're just not there yet.
Well, what about European tech? How do you play that? Because we've got Tom Mackenzie at London Tech Week this week. Everyone very excited about UK tech here. What do you like?
I mean, we love tech anywhere, anywhere and everywhere. And I think that was partially kind of the trade this year, is that we saw, or like middle of last year, is a rotation out of like US software into Asian hardware or European hardware. Anywhere and anywhere you see tech, that's for us kind of an interesting place to be, because it's secular earnings, right? No other sector has that. So yeah, no, we love European tech. We wish there would be more tech in Europe, and that's why it would be a better trade.
Can we link the oil price and tech, or higher energy costs and tech? I mean, to your question, Lizzie, about we could at any moment see a deal. It doesn't seem, and we do kind of have a peace deal, sort of a ceasefire hanging by a thread, but it's still supposedly in place. But we've seen higher energy prices being priced in by a lot of people, even if we do get peace in the Middle East. And the tech sector is a very energy-intensive business. Certainly the AI part of it is. So when do these two things come together? When does the higher energy cost undermine tech enthusiasm, Marija?
So the way I think about like energy and how it affects like various sectors is through margins pressure, right? So we were thinking, okay, higher energy costs, higher energy prices increases your costs. Who can kind of pass those costs to consumer? Who can tolerate those costs? And you think, okay, I don't know, NVIDIA, HK Hynix, Samsung, their margins are about 70%. Walmart margins are about 3%. So you say higher energy costs, who does it hurt more? And then you kind of get, okay, it hurts like others, particularly defensive sectors, retailers and like food producers. So that's where the margins are the tiniest. They hurt far, far more, and their kind of pricing power probably a lot less. Like the end consumer is unwilling to take higher prices, right? So that's that's the way we're kind of thinking about margins. And in that world, I think tech is probably in a better position to kind of withstand those kind of pricing pressures. So again, Tina.
Well, of course, oil feeds into this rate hiking story. Anna touched on it. Are you factoring into your view more than one ECB rate hike? Does that make you like banks, for example?
Yeah, no, very concerned about. I mean, Europe is a really difficult position, right? So you have, we had like a nascent recovery in kind of economic and earnings momentum at the end of last year. A lot of it came from lower interest rates from ECB, and we got this momentum coming. And now we have, high inflation, and the interest rate fighting central banks, so they have to hike more. And that damages growth. So from equity investor point of view, that's really, really challenging scenario for Europe.
What about M&A, Marija, and the role it plays right now? I mean, we're dealing with a host of M&A stories this morning. Tate Lyle jumping, Monte Paschi jumping 10% to the highest since 2022 on M&A proposals. We've seen a couple of different banks in Italy trying to go after that very old bank in Italy, French telecoms. I mean, are you playing that as a theme, the M&A theme?
I mean, I think the way we kind of like generalize this M&A, I mean, outside like kind of picking winners and losers, but the way you generalize it is that there's still money around, right? And I think that's really, really important point to understand kind of current market dynamics, because news flow is horrible, right? You worry about growth, you worry about inflation, you worry about wars, there is, valuations, positioning, so everything. But we have a lot of money in the system, right? We see this M&A. The companies have money, financial system has ample liquidity, and that supports equity valuations overall. That pushes credit spreads lower, and that kind of maintains this rally. And we just picking winners and losers, and that's your earnings, and that's your tech, Tina.
OK, that is Tina. Back to Tina. Marija, thank you very much. Thanks for joining us. Marija Veitmane, Head of Equity Research at State Street Markets. So Tina is still in effect with regards to the tech sector for Marija. Let's have a look at the core six then and see where we are. There's a bit of a tech theme in the core six. We've got Schneider Electric as part of Europe's tech push, of course, ASML. Tech not looking too hot this morning, but we do have some negativity around that sector. But there's plenty of it to go around. There's negativity around Novo Nordisk as well. Chloe was talking about that earlier on. Nestle, perhaps there's a bit of a relatively defensive play on some of those food producers, but everything is in the red. Let's get a check on the individual stocks that are on the move then. Chloe Melly has a breakdown. Chloe.
Good morning, Anna. Let's start here with Italian banks, which, of course, are very much in focus after Monte Paschi received offers from both Intesa Sanpaolo and Banco BPM. And we could see that really boost the stock this morning while the bidders are actually here in the red. And a potential deal between Paschi and Intesa Sanpaolo would create the most valuable finance firm in Italy, actually going beyond what in UniCredit. And so we are seeing UniCredit getting a little bit of weakness there on the back of that as well. This could really trigger a new wave of deal making in Italy, so let's watch out for that. Moving on to tech, which is seeing this continued weakness that started last week as we're seeing this pullback in the AI trade and some of this sentiment around AI reversing and waning a little bit. And we are seeing, in particular, BE Semi in the red, more than 3.5% this morning. On the other hand, on the flip side, we are seeing oil majors doing very well this morning, all in the green after Iran and Israel exchanged fire. And so, of course, this really is really thinking about how fragile the ceasefire is in the Middle East. And of course, as we've seen over the last few months, whenever peace is fragile, oil jumps, and therefore oil majors do much better. And we're seeing Equinor in particular up in the green this morning. Moving on to Airbus, which is down after it is said to have told some customers to expect some delivery delays on some jets. And so, of course, this now widens that performance gap that we've seen between Airbus and Boeing, its closest rival, which is actually really doing much better now and accelerating that output. And finally, let's go over to Orange, which is the French telecom company that is part of this consortium of companies that have agreed to buy the telecom business SFR in a deal that values it at about 20 billion euros. This is a deal that was in the making for a long time. It's happened, and so we're up slightly this morning for Orange.
OK, Chloe Melly, thank you very much for that. Ending on a bright spot with Orange, but it is a red picture across the screen for European equities this morning. The Stock 600 down 0.7%. We will focus on another sector that's in the red next. Airline selling off on higher oil prices as industry leaders gather at the IATA summit in Rio. Guy Johnson's on the ground there. We'll go to him next. This is Bloomberg.
Welcome back to the opening trade. We are 17 minutes into a session that is pricing in further selling of technology. So the DAX is down by more than 1%. We seem to be off earlier lows then. The Stock 600 is down by 0.7%. And the FTSE 100 cushioned a little bit by the fact that we have oil prices higher, negative for risk sentiment generally, but positive, of course, for energy stocks. Let's talk about a sector that is not in positive territory, and that is aviation. Because of that higher oil price, we have those airlines under pressure this morning, the likes of Air France, IAG, Lufthansa, all down by more than 2% as the oil price has a 97 handle on Brent. Now, the world's top airline bosses have been meeting in Rio de Janeiro for the annual general meeting of the International Air Transport Association, or IATA. Bloomberg's Guy Johnson is there for us and has been taking the temperature. Guy, good morning. Very early where you are, I know. What are the key things then that airline executives are thinking about then as they gather for this event? There's a lot going on.
Unsurprisingly, Anna, as you just said, fuel is absolutely the number one topic. That's what everybody's talking about. The sense is at the moment that we have probably enough fuel. The airline industry has enough fuel for the next few weeks, but beyond that, nobody is certain on what price they're going to be paying for their fuel going forward, and nobody, to be honest, is looking too much further forward. The line you get is, we're okay for the summer. And I was talking to Ben Smith. He runs Air France KLM. And he was very clear. We cannot rule out at this point in time further fare hikes. We've already seen some. There's the possibility of more.
If the fuel significantly spikes, we're going to have to raise ticket prices to compensate for that. And when you raise ticket prices, there'll be less demand. So the need for the full capacity that we had planned is probably not going to be the case.
So, Guy, once we get out of the summer and fuel's still expensive, are all the airlines actually going to make it?
That's the question that everybody's asking, and that's the kind of the puzzle that some of these CEOs are trying to put together at the moment. Lizzie, you've already seen Spirit go in the United States. Everybody's trying to figure out what the EasyJet future looks like. Could there be a breakup story there? Certainly, that's been a big topic here as well. But certainly, you've got Castle Lake circling that business. And the expectation is that basically you get through the summer, demand's strong in the summer, and as a result of which the weak airlines are probably likely to survive throughout the summer. Demand's going to be good enough, the bookings are good enough, they could probably pay the higher fuel fares, even though they're not hedged. But you get into the autumn, and that's where life starts to get really tricky for some of the weaker airlines. And you have to say, you talk to the big groups in Europe, certainly, and this is maybe a similar story over in the United States and in Asia, and they are looking for opportunities to maybe come out of this. And that's interesting. So I was speaking to Luis Gallego, who is the CEO of IAG. He's already got he's already got British Airways, he's already got Aer Lingus, he's already got Iberia in his stable. And he thinks post the Draghi report, actually consolidation is going to be easier. And he is looking at the autumn and he is looking for opportunities.
I think we are taking advantage in some routes that now the people, they cannot fly through the Middle East. We put more capacity to some destinations from London in Asia. But I think it's something that is going to finish soon. I think as soon as the Gulf carriers
recover. So it's not structural?
No, I don't think so.
No.
I think some of them, they are flying now 80% of the capacity they were flying previously, and I think we are not going to have a structural change.
Do you see a price war out to Asia? Do you think the Gulf carriers need to do that? They're already signalling they're kind of okay. Do you think they're going to need to manage prices?
I suppose they will try to stimulate demand. Price is a tool that they can have.
When we get to the end of the summer, there's a possibility that a number of airlines are going to be struggling.
Yes.
Do you see an opportunity for M&A coming up?
We always say that this crisis can help to consolidation because we started this in a very good position with a very strong balance sheet, 15% of margin. So with the hedging, others, they don't have all that. So at the end, they are going to have problems. And what we want after this crisis is to be stronger, to show again that how resilient is IAG, And I am sure we can have opportunities, and we are going to.
Any targets you're looking at? Any areas that you're looking at? Would it be domestic Europe? Where were you looking?
No, I think you know that we tried, for example, to do the Europa operation before. It was not possible because of the European competition. And I think now Europe, they are trying to change the approach to consolidation, and maybe that can open the door again.
It's going to be easier to consolidate in Europe, you think, going forward?
I think they realized that after the Draghi report that we need to be more competitive, and we are not today. So I think if they have a different approach, maybe some operations that were not possible before can be possible now.
Any ideas of what that could look like?
No, I think...
Come on, Luis, there's got some names out there.
Yes.
What's on your shopping list?
We always have a department following opportunities. The International Airlines Group is a platform for consolidation. So it's our role to try to find out who can join the group, if we can improve the performance of that company with the model that we have.
And there are airlines in Europe that could fit that bill?
Yes. And I think a lot of airlines also, they would like to belong to IAG because of our model, that the different airlines, they have their brands, the customers, the network that we said before. So it's a model that is attractive.
So, Guy, clearly M&A is very much a theme, very much on these executives' minds. And logically thinking about that, the big Gulf-based carriers, Qatar, Emirates, Etihad, might they be the ones that are really struggling on the other side of this? And if that's the case, does somebody come after them?
I think it's unlikely that nobody's going after the Gulf carriers. They are largely state-owned, so nobody's going to go after them. But they see also, ironically, Anna, they see an opportunity, which is amazing when you think about what is happening, even the news flow over the weekend. So they definitely see an opportunity. Now, Emirates is much bigger. It is an amazing airline in so many ways, but it's going to be interesting to see how it comes back. Etihad is maybe a little bit smaller, maybe a little bit more nimble, and it definitely sees an opportunity to come out of this. And what is really interesting is I caught up with the CEO yesterday, and he was saying, we are on the phone every few days to Airbus and Boeing, and what we're asking for is earlier delivery slots. We want more aircraft. We think this is over, and we think we get stronger from here. So what we want is more airplanes. So amazingly, they're ringing up Airbus and they're ringing up Boeing and going, is anybody cancelling? Is anybody cancelling? Can we have those slots? And what he told me yesterday was, and take a listen, is that is now starting to happen. So the weaker airlines are beginning to give up some of those really valuable delivery slots.
We're ordering planes right now to be delivered between 28 and 2032, and we're getting positions of airlines that are giving up. These ones that we're getting right now are new, are not secondary, but we're open for secondary planes.
Guy, thanks very much. Bloomberg's Guy Johnson, of course, on the ground for us in Rio de Janeiro. He gets all the tough gigs, so as he did point out to us earlier, it is very early over in Rio. More from Guy as we go through this week. Lots of that's the M&A story when it comes to the aviation sector, where it is and crucially is not going to be a focus for the European aviation space. We've got plenty of M&A to talk about this here in Europe today as well. The banking sector in Italy, the French telecom sector. It is interesting that we are getting all of this coming together at a time where we are worrying about higher interest rates in Europe.
Yeah, and double-digit moves for Tate and Lyle off the back of their M&A moves, up 12% as things stand. So really interesting. We said that Guy gets a good assignment. Tom Mackenzie's out at London Tech Week. I'm a little jealous of that because there's a big buzz around it this year. Live at London Tech Week all week, and we will be looking ahead to the key gathering of tech bosses. Judith Dada from Visionaries will be speaking to Tom. I'm glad they're excited because European markets are not this morning.
Well, we'll see whether that enthusiasm for European tech, can it withstand the stresses that we're seeing in the global tech trade. You know, the Nasdaq down by 4% on Friday, heavy selling in the Asia session, Samsung, SK Hynix and the like. Is that all just in the background for these tech executives as they gather, or is that something that's very much front and centre for them? We'll get an update on the vibes in the tech space. That's coming up next. This is Bloomberg. Welcome back. This is the opening trade for Monday. We are 30 minutes into today's session, and things are weaker across these European equity markets. We're continuing to sell technology. We are concerned about higher oil prices and the damage that does to the European economy. It seems all of those coming together to create negativity for European stocks. But we are off our earlier lows. We're down by 0.6%, so certainly we are seeing selling. But the DAX, for example, was down by more than 1% earlier on, now down by 0.8%. The FTSE 100 has been hit by, like other markets, but is cushioned by that exposure to big oil and big energy. And we're seeing oil prices much stronger this morning as a result of what is happening in the Middle East. So despite all of the headlines, and there are plenty of them, Lizzie, we are paring some of the losses, but still heavily in negative territory on these European equity markets.
A positive spin on a miserable Monday. Thank you, Anna. Let me just illustrate how miserable it actually is. 440 members of the Stock 600 down this morning versus 149 in the green, but bigger volumes today. We're up nearly 60% across the Stock 600 compared to the 20-day moving average. Let's just flip over, though, and look at some of the particular leaders this morning. We've talked a lot about the M&A Monday story. Some of it comes from the Italian banking space, but the leaders this morning all from that space. We've had both Banco BPM and Intesa making separate offers to acquire Paschi gaining nearly 10% at the moment. BPER up 4.5%. Generali up 1.6%. But on the flip side of the deal making, let's take a look at the laggards, because we have got Intesa in the red this morning, down nearly 4%. Zealand Pharma, a different story here. It's down the most in more than 3 months, 21%. Analysts highlighting disappointing data on a weight loss drug trial. And we've highlighted that theme going around the world, AI. And we've seen the losses in Korea and Asia. We've seen losses on the Nasdaq on Friday. We're seeing it where there is tech in Europe this morning. ASML is one of those names to watch, down 1.1% this morning, Anna.
Lizzie, let's get an update on the other news flow. And in fact, we'll start with one of the stories you were just referencing there. Intesa Sanpaolo has launched a €31 billion bid for Monte Paschi just a day after rival Banco BPM proposed its own merger deal with Paschi. A takeover would create one of Europe's most valuable banks and boost Intesa's position as the largest lender in its home Italian market. Oil has jumped after the Israeli military said it struck what it called military targets in Tehran. This after Iran launched missiles towards Israel, threatening the fragile ceasefire. And President Trump said the Federal Reserve would be wrong to raise interest rates as his nominee, Kevin Walsh, prepares to chair his first Fed policy meeting. Lizzie, we will see whether the rate setters at the FOMC agree with the president or not.
Well, let's get back to that tech sell-off going around the world, driving Asian markets lower at the start of a busy week for the sector, but also driving us lower here in Europe. And, we had Nasdaq futures lower before, but they're now up 0.7%. But it's a busy week to come. We've got the record-breaking SpaceX IPO. Earlier on, we were hearing from the Nvidia CEO, Jensen Huang, signing a partnership agreement with SK Hynix. So loads to dive into with Matt Bloxham, Bloomberg intelligence analyst, who joins us around the desk now. Good morning, Matt.
Morning.
So, loads to come. Let's start with the Nvidia SK Hynix deal. Didn't seem to help markets in Asia.
No, it didn't really, and I think to some degree, this was previewed last week when Jensen Huang said that he'd, kind of cleared all of the big three chip makers for high bandwidth memory for their next generation of AI accelerators. So, I think this is just kind of really the crossing the T's and dotting the I's on that. I think there was some sense that maybe kind of volumes on Vera Rubin, which is the big platform that these high bandwidth memory chips will go into, were perhaps a little bit softer than expected. But yeah, I think there's clearly kind of broader issues at play here.
Matt, it's a really big week. As Lizzie was saying, we have the SpaceX IPO coming. Yep. To the extent to which that is an pure AI story, I'm still not sure, but that's certainly how it's being talked about a lot. We've got that happening. We've got a developers conference taking place at Apple, and all of this coming at a time where we see continued selling of tech globally, certainly on Friday in the US, into Asia, into Europe. Now, Nasdaq futures point a little higher. Is all of this latest news flow, are these events of this week going to change the mood, give us a more positive story to tell then, do we think?
Probably not, if I'm honest. I mean, and coming to your point about what is SpaceX, I kind of personally think it is very much an AI-first story. There are clearly lots of other bits to it, but it's really all about the opportunity within AI that they're going for. I wonder to some extent whether some of this selling pressure in tech is people making room for a bit of SpaceX in their portfolios, because $75 billion of fundraising doesn't just kind of come from nowhere.
It's interesting because some investors talk to us about that portfolio effect and say it will matter, and others say no, actually we can digest this.
Yeah, I mean, I think inevitably there's going to be some people making room for it in their portfolio. I think interesting, with the Apple Developer Conference, obviously the last one for Tim Cook. Now, this is the software conference, so this is where you kind of get updates on the operating systems, and it's quite often people start to kind of look in the weeds of what's coming with the operating system updates and make kind of guesses or kind of speculation about the next wave of hardware. And obviously in September, we're expecting Apple to launch its first foldable phone, which could be quite a game changer in terms of that part of the marketplace. I think also what's going to be very big in that conference is the overhaul of their AI offering. We've been probably talking about this for 2 or 3 years. I think finally there's going to be a much bigger kind of reimagination, if you like, of the Siri assistant and trying to make it a kind of much more broader product, maybe using agentic AI to kind of like weave together different parts of the Apple ecosystem. So if they get that right, it could be quite a powerful kind of rebirth, if you like, of their AI proposition.
I could really do with a flip phone. I'm always smashing my screen.
Yeah.
Sounds like a good idea, Matt. Thank you very much. That's Matt Bloxham from Bloomberg Intelligence.
OK, lots of food for thought then at London Tech Week, which kicks off today as leaders in technology and business converge in the UK capital. Tom is there for us, of course. And Tom, we've got, of course, tech selling, very topical right now. The AI, the forefront of AI, really exciting. Lots of listings coming this summer. Many people worrying, though, are we in bubble territory? I wonder how all of these themes are coalescing into Tech Week this week.
Yeah, and Anna, we're going to start on that question with Judith Dada, General Partner at Visionaries Club. Judith, good morning. Anna was posing the question, of course, the focus of the markets right now is the sell-off that we're seeing in Asia, the US as well, particularly when it comes to those semiconductor stocks. And question marks really about whether we are in bubble territory and whether we're getting closer to a moment where this AI bubble bursts. Where do you stand on that debate?
I think we're right to scrutinize the investment that is going into AI. And I do think, like in any big technological shift, parts of the market get carried away. I think what we've seen over the last couple of months is companies just spending on tokens like crazy. And now a lot of people, and especially CFOs, asking the question, where is the ROI? And if we look at the current CapEx build-out, I think there's one really important message. The current CapEx build-out is nowhere near showing up in the current economy. It's capacity that's currently being built, and we're going to need to wait a couple of years to actually see, kind of the capability that data center capacity has on the actual market. I think when it comes to AI, the much better view is always kind of a cohort-based view, right? So the kind of current impact of AI that we're seeing are really investments that we've made over the last couple of years. And so my TLDR would be, I don't think we're in a bubble. I do think there's massive underlying value in this technological shift. But there was parts of the market that did get carried away in this current wave. And so I think we're right to scrutinize that investment and really find the ROI for companies to actually...
And you're convinced that ROI and those productivity gains do come through, not just for small companies and startups, but also for the larger corporations as well that are investing so heavily in this technology?
Absolutely. Again, I think it's a question over time. I think right now we're still in early AI adoption territory where we're trying to shape the size of this new technology in the right way. Everyone's trying it out, kind of people are firing up their code agents, and it takes time for us to actually figure out what are the systems and what are the ways in which we can make use of AI, but also change organizations in order to find the biggest productivity gains. So have P&Ls of most companies been definitively positively impacted by AI today? I think not yet. I think we're still seeing, kind of a lot of the actual trickle down of how the AI is actually going to lead to ROI. But I'm fundamentally convinced that we're going to get there. I think there's just one important message. AI is developing at exponential speed, but humans develop at human speed, which is quite slow most of the time, especially humans working together in complex organizations. And so the diffusion of AI in society does take time. We do need to have patience to really figure out how to have humans working with AI agents in the best way. And so I think there's patience required in terms of actually seeing the ROI impact, even though I'm fundamentally convinced that we're going to get there.
And I guess that raises the question as to whether or not investors have the patience, at least investors in publicly listed companies have that impatience to wait the 2-3 years before the return on investment comes through. That is your time horizon, around 2 to 3 years before we see material ROI?
Yeah, I don't think it's going to take all that long, but I do think, in terms of really shaping AI correctly, it will take a little bit longer than what we're currently seeing. I do think we're currently still in the early territory of everyone's kind of using frontier models. Just to give you one example, everyone's right now using the most expensive frontier models, the kind of thinking models. And there's a lot of alternative options. There's a lot of smaller models, open source models that are vastly cheaper. We're often talking a cost reduction of 10x. But today it's very hard for people to actually use those models. We're still in a market where model routing and actually giving and showing you the different capabilities that AI has, like the expensive version, the cheaper version, is not something that is made super easy for businesses or consumers, but I do think we're going to get there. And so there's just a lot more that we need to do in terms of building the actual enterprise platforms, the actual consumer product platforms that optimize for the most intelligence at the cheapest cost for end consumers. And that's, I think, when we see a lot of ROI coming.
That's really interesting. So open source is a choice, and to your point, open source is cheaper. So that leads me to a question about whether or not you think the valuations of Anthropic and OpenAI, whether you're comfortable with those valuations. Do you think that they're fairly valued right now, close to $1 trillion?
I think what is a fair valuation? People asked the same question about Nvidia, a couple of years ago when they hit, I think, $3 trillion valuation. And I said back then, I don't know if Nvidia is, correctly valued at this specific moment in time, but I know that they're going to be worth a hell lot more than $3 trillion over the course of the next 10 years. And so I would say the same about Anthropic and OpenAI. I do think, sometimes there's overhyping in the short term, but I do think we're still undervaluing the total transformation potential, including the potential of those companies in the mid to long term.
Europe is not going to win when it comes to large language models. Seems to be a consensus. Where can Europe win? Where are our strengths?
There is a really important next paradigm that we're currently seeing, which is robotics, embodied intelligence, and world models. So the ability for AI to actually perceive the real world and take action in it. And there's a couple of really, really promising companies in Europe. We have, for example, AMI in France. We've got Black Forest Labs in Germany that are really building this paradigm. Interestingly enough, these companies also need industrial data, so data from actual robotics, industrial manufacturing companies. It turns out that Europe actually has a massively important industrial base of companies who have that data. And so in that next paradigm, we already know that this is going to be the looming bottleneck on the horizon. I think now is the time to really double down and to really make sure that we win on that front, because the US and China are in a race to win AI, and that race in the short to mid-term will lead them through robotics. And it's a way for us to have more weight at the table and to thereby strengthen our geopolitical position if we play a really, really important role on that frontier.
Do we assume that more jobs are lost than created, at least in the short to medium term, as AI is adopted? What is your view on how disruptive this technology will be for the labour market?
I think what we're now seeing is we're seeing the kind of nuance that is required in trying to understand how AI affects jobs. This idea that AI is going to put everyone out of a job is absolutely ridiculous and false. The idea that AI is not going to disrupt jobs at all is equally false. It is likely going to lead to the full automation of some roles and people who will be very exposed. In Europe, thankfully, we have the kind of social welfare systems that provide for people, even in the event where that will be the case. Then there's jobs who just need to change, right? A job is a bundle of tasks at the end of the day. It's a couple of things that you do to get to the end output. AI is now able to do some of those tasks really well, better than humans, but it's still not able to do all of those tasks. And so those remaining tasks, economists call them weak links. That's where value is going to accrue, because those tasks are going to become the bottlenecks that AI can't do yet. And so humans will need to figure out how they can do a lot more of those tasks. A lot of them are relational, right? It's conversations like these. It's humans actually going into conversation, into contact with one another. So figuring out how we can do a lot more of that is part of the middle bucket. And then there's a new category of jobs that we're not even able to give a name yet, because they haven't been created yet, that will become possible because of AI. And so I think what we're going to see is we're going to see jobs change in those different ways. And I do think, by and large, in Europe, we have the kind of social system that actually does give people at least some protection, especially the most vulnerable people, to kind of engage in that transition in the best way. I think what is not an option whatsoever is just shutting our eyes and saying, AI is causing me to change, I don't like change, and therefore I'm just going to ignore this trend, because I think that is just a recipe for not being able to win in the race at all.
Is Europe and the UK's dependence on US AI and tech a vulnerability? And how should it be addressed, if so?
It absolutely is a vulnerability. Today, Europe hosts about 5% of global compute in AI, and the US hosts about 80%. That means for a lot of the inference that we use, for a lot of the prompts that we use with AI, we're dependent on US data centers. That puts us in an extremely vulnerable position vis-a-vis the US. We've seen the White House executive order as kind of a first step of the geopolitical hardening and, kind of the White House enforcing more control over AI. And I do think as the technology progresses, we're going to see a lot more of that. And so I want a world in which Europe can make use of the amazing capabilities. I think this is something that also gets lost in AI, is kind of the very positive story of how it can really benefit society, benefit individuals, benefit organizations. I want all of that to be available to Europe, but in order to do that, we need to be at least partly self-reliant. That doesn't mean we need to own everything in the stack. That doesn't mean we need to own LLMs, own everything, but we do need to own important bottlenecks that allow us to build leverage that we can then basically exert with weight at the table in terms of keeping access to the most amazing technology that humankind has ever seen. And so that's what I'd like Europe to focus on. And I think what we need to embrace is that it needs for some really hard trade-offs that we're not engaging in today. I do think it calls for the most ambitious political agenda that we've ever seen Europe engage in peacetime in order to build the kind of leverage and have a seat at the table.
Okay, that's the level of ambition that is needed, and those are some of the trade-offs that are needed as well to make the most and position Europe and the UK at the forefront of this technological change. Judith, fantastic, really, really valuable insights. Thank you very much indeed. Judith Dada, of course, General Partner at Visionaries Club. Anna, Lizzie, back to you.
Yeah, really interesting conversation there. Tom Mackenzie, thank you very much. Of course, at London Tech Week, much more to come from Tom, and he'll be talking through the AI theme from many different angles throughout the day at London Tech Week. He'll be speaking with the Multiverse CEO, Ewan Blair, so that's the opportunities in AI. The regulation also gets a mention, the UK Minister for AI and Online Safety. Back to the opportunities, Brookfield's head of AI infrastructure will also be speaking to Tom. Coming up, though, we haven't lost sight of some of the geopolitical challenges that Europe is certainly dealing with. European leaders join President Zelensky to call for an immediate ceasefire in Ukraine. More on that next. This is Bloomberg. Welcome back to the opening trades at 8:50 in London, 50 minutes into a European session that is definitely negative, so down by 0.6% for the Stoxx 600. We've seen some weakness coming through in technology, but construction materials actually is the weakest sector this morning, down by around 1.5%. We do have a bit of upside. That's coming through in the shape, Lizzie, of just energy and insurance stocks, pretty much the only sectors in positive territory.
Well, let's turn to the geopolitics now. European leaders calling on Russian President Vladimir Putin to agree an immediate and complete ceasefire that allows talks to begin on a lasting peace deal. The joint statement came after Putin rejected a ceasefire proposal by Ukraine last week and an escalation in military action over the weekend. Let's go straight to Tony Halpern. He leads Bloomberg's Russian economic and government coverage. He joins us now from Dubai. Morning, Tony. Is this even worth looking at seriously when you've had Putin rejecting a meeting and negotiations with Zelensky himself? What's to say that these 5 demands of Putin made by these European leaders are in any way realistic?
Yes, it was a very strange sort of shopping list of demands from Europe's leaders, really, because, as you say, these were ones that Putin has already rejected as recently as Friday. He said for quite some time that he's not interested in a ceasefire while peace talks take place because he thinks that gives Ukraine a chance to rearm. So he was going to continue fighting until a deal is on the table. He doesn't want, for example, European troops in Ukraine as part of any multinational force. And he doesn't think the current line of fighting is where peace talks should start. He wants to take part of Ukraine's eastern Donetsk region that he doesn't yet possess. So most of those points have been rejected by Russia. There was nothing in the statement that showed any increase in pressure from these European governments. So as a declaration, really, it was sort of dead on arrival.
Right, and so that's important to know then, Tony. And so with that said, what happens next? Just more of the same, continuation of the war in Ukraine?
Well, I think different elements of the statement actually were quite more important because they were looking forward to the G7 meeting that's coming up. They were looking forward to the NATO summit that's coming up soon in Turkey. And I think the Europeans were basically setting out their stall to say, look, we need to continue supporting Ukraine, we need to continue providing military aid. And in some ways, that was an argument directed not so much at Vladimir Putin as Donald Trump, because he will be at both those meetings, of course, and they've had some concerns about his willingness to continue supporting Ukraine. And the Europeans are basically saying, look, there's no chance of really any peace talks with Putin, so we do have to continue supporting Ukraine in its defense.
OK, Bloomberg's Tony Halpin in Dubai. Thank you very much indeed. Well, taking a look at what else we've got on the docket through the week. Today, we've already been there with Tom Mackenzie, London Tech Week getting underway. And today, we'll hear from Tim Cook as well at Apple's annual Worldwide Developers Conference, that happening in tandem. Tomorrow, we get German industrial production data. Before on Wednesday, we get CPI data out of China and PPI due as well. And we'll have US inflation data, of course. A big day here in Europe on Thursday, the ECB releasing its rate decision, a hike expected by traders. SpaceX shares also expected to price after the bell stateside, plus the FIFA World Cup kicking off in Mexico. Friday, we will end the week with UK industrial production data.
Let's get to Skylar Montgomery-Koenig then from the Markets Live team, who is here to help us look ahead to the rest of the week then, Lizzie. Skylar, good morning. So do you want to start with US CPI or do you want to start with the ECB? Because both of these seem to be like really big events of this week. Where's your focus?
I mean, definitely US CPI. I think that's much more interesting from a market perspective. What we saw at the end of last week was US equities in particular coming under a lot of pressure. Now, it started off because Broadcom's guidance was a bit weaker, which tells you that it's not really a fundamental shift, right? You're not seeing earnings turnovers. So that points to more of a correction than something more bear market-y. And then on Friday, we got non-farm payrolls very, very hot. Now, the worry for equity markets is you get higher yields from that. It doesn't usually come along when you have higher growth. Usually that higher growth outweighs the outlook for equities, but I think it's telling of an equity market that's gone too far too fast. Now, as we get US CPI this week, the worry is that because you have strong growth, the Fed's going to primarily focus on inflation, and that inflation print's expected to come in very, very hot. So US CPI at something like 4.2% is the expectation, and I think that's still worrying for the market, and I think it'll firm up those hike expectations, even though we have gone a long way since the end of last week.
Yeah, so we are now pricing in a hike this year, aren't we?
Well, let me take you to the subject that you're less interested in, the ECB, and try to make it more exciting. Yes, we're expecting a hike on Thursday, but are you in the camp that says we're going to be one and done after Thursday?
I'm definitely leaning more towards that. I think the issue with any kind of central bank expectations right now is that we still have the conflict in Iran waging on. I think I lean more towards that way for Europe because I see a lot of growth downgrades in the pipeline in terms of, yeah, you do a hike and you're still kind of within neutral, but you have higher commodity prices for such a long time, and they're expected to still be high at the end of this year, even though there's a lot of optimism around the Strait reopening, and that's very negative for growth. So they're doing this hike more as an insurance hike, saying, look, we're working to fight inflation. If we don't do this, that's an easing of monetary conditions. But I don't think it's necessarily a worry as much there as it is, say, in the U.S. that you get inflation persistence.
OK, Skylar, thank you very much. Worth noting, I was just about to ask you whether we're going to keep talking about tech weakness, but actually, I mean, NASDAQ futures are now up 0.8%, which is a little bit firmer than they were at the beginning of the programme, so it does seem as if we are looking ahead with tech in mind to something a little bit more positive, Lizzie.
Yeah, quite a turn of events for the NASDAQ futures, but our coverage from London Tech Week is going to continue throughout the day. Tom Mackenzie will be joined by the Multiverse CEO, Ewan Blair, so that conversation coming up at 9:15 a.m. London time on The Pulse. But that does it for the opening trade. Anna and I are off. Francine's coming in. The Pulse up next. This is Bloomberg.